Ladies and gentlemen, good day and welcome to the Transpek Industry Limited Business Update Conference Call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bimal Mehta, Managing Director of Transpek Industry Limited. Thank you, and over to you, sir.
Thank you. Good evening to all participants. I extend a warm welcome on behalf of Transpek Industry Limited to everyone joining us for our business call today. I am accompanied by our Joint Managing Director, Shri Avtar Singh, CFO, Mr. Pratik Shah, our Company Secretary, Mr. Alak Vyas, and SGA team, our Investor Relations Advisors. I will provide a brief overview of recent developments. Post that, we will open the floor for questions and answers. Just to reiterate, given the nature of our business model, we have consistently emphasized that in our earlier interactions that our company's performance should ideally be assessed more on an annual basis and not on a quarterly basis. The fiscal year 2024 presented notable challenges across the chemical industry value chain. This was primarily stemmed by widespread global destocking, slow demand from end-user industries, and uncertain pricing scenario due to excess supply of select products and full opening up of supplies from China, and that too at a very low price in most products. The overall business performance of Indian chemical manufacturers had been subdued for the financial year 24, and we were not immune to it. I would like to emphasize that company to certain extent withstood the headwinds in this challenging business environment due to stable business and customer trust. And we have also followed prudence in not deploying capital on capacity expansion without having clear demand visibility. With a 6 decades of presence in chemical industry, Transpek Industry Limited is a prominent supplier of chlorinated products, serving diverse industry including plastic, polymers, pharmaceuticals, agrochemicals, dyes, pigments, photoinitiators, etc., organic peroxide, etc. We are delighted to say that all our products are developed in-house at Transpek. Additionally, we have strong collaboration with esteemed universities and scientists in the surrounding area for new product or chemistry work. Over the past few years, our company has focused on developing more value-added, stable and scalable products. As part of this strategic plan, we developed multiple new products and dispatched samples in financial year 2024. However, further validation and scalability of these products will depend on customer mandates, and we will deploy capital prudently to support these efforts. Coming to some brownfield work that we did, the plant that replaced an old plant has already been commissioned and has started production. The products from this plant are currently in low demand, so it is not operating at full capacity, but plant is ready and it's giving the product that is required. At the same time, we have identified some potential from pharma chemical market in various regions such as Africa, Middle East, South America, and Eurasia. Our objective is to expand a diverse range of products with more value-add and high-margin products. In the next 3-4 years, we target nearly 30-35% business will be derived from high-margin products. We recently started business with customers in Eurasia and South America. We have also started supplying products to United States customers. All this strategic transition positions us for sustained growth and success within the evolving market landscape. As mentioned, business performance for financial year 24 has been soft due to gradual pickup from clients amid uncertain demand and lower volumes in domestic market. Demand across the end industries have remained subdued both in domestic and global market. The ongoing challenges in Middle East and Europe have further impacted the demand. With over 85% of our total business coming from the export market, freight and logistic costs have increased to some extent in second half due to Red Sea crisis. However, a large part of our freight cost is paid by customers, so that is also something that has cushioned to some extent this increase in freight cost. Overall, lead time has also been impacted because the inbound and outbound shipments have to take a different route than the Red Sea. Our production strategy is closely attuned to current market demands. Though in medium to long term, the demand for key acid and alkyl chlorides are anticipated to remain stable, and based on recent engagement with our customers and clients, we are expecting a modest revival in second half of financial year 2025. Now coming to one major subject that many of you have been requesting for listing on NSE. So as you may be aware, we had already initiated the process of listing our company shares on National Stock Exchange, and the process has already been going on. But there are there's huge amount of documentation, including the information that was required from 1970s and 1980s. So all this information has consumed a lot of time, and now we are almost ready with our application. Our advisors are examining this information and data in detail, and once it is done, we'll be applying to NSE very shortly. Coming to the financial performance of financial FY'24, total revenue for FY'24 stood at 604.8 crores. EBITDA for the year stood at 107.5 crores. EBITDA margins for the full year came in at about 17.8%, so roughly about 18%. Profit after tax for the year came in at rupees 38.6 crores, and board has recommended a dividend of rupees 14, which is 140% per equity share of its value of rupees 10 for the financial year 24. With this, I conclude the speech, and now we open for the questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav Chimodia from Anvil Research. Please go ahead.
Yeah, sir. Thanks for the opportunity. And good afternoon to the entire team of Transpek.
Good afternoon.
Sir, I have 2-3 questions. So one, if we see this financial year FY'24, I think our revenue degrowth is close to 28-29%. So if you can just walk us through in terms of how much was the volume degrowth in FY'24, or was there any price-led degrowth also, which has led to this 28-29% fall in our revenue?
Okay, so there are, both are correct. One is there is definitely a volume in terms of quantity. Volume degrowth, especially in some of our polymer application. And on the other hand, price also has reduced. Now, price has reduced not only because of the market dynamics, that also is there, but it is not very significant. But more importantly, as you might be aware, FY'23 raw material prices had shot up.
Correct.
So this is back-to-back effect. So raw material prices shot up, so naturally our prices went up. Now raw material prices have largely come to reasonable level, and that affected our sell price also. So both where the reduction has happened.
Correct. Because sir, if we see our polymer division sales, I think it has degrown by close to 21%. So I presume that,
yes.
Yeah. So I presume that out of 28-29% degrowth, what we have seen, 21% is predominantly coming from the polymer division, and that too in terms of the lower offtake from the customer. So
yes, largely the volume. Yes, yes.
Yeah. So safe to assume that, let's say 24-25% of this degrowth is contributed by the volumes and rest by the prices?
24 to 25% of this degrowth is maybe little more by volume. More by volume.
So almost all the degrowth is predominantly from the volumes only, if we take it in that way.
Yeah, but there has been impact of price. The raw material cost. There has been impact. I don't have the exact number.
No worries.
But yes, there has been impact of raw material. As for example, couple of our raw material went down by almost 30-35% than what it was in FY'23.
Correct. Sir, based on your customer interaction, you mentioned one of the point in the opening remarks that we expect some modest recovery from H2.
Yes.
So let's say FY'23 was the best year for us in terms of the volumes from almost all the product segment, predominantly the polymer side.
Yes.
So can we see those volumes fully recovered in H2, like what degrown we have seen in FY'23? Is it safe to believe that most of those volume degrowth could be recovered in H2, or those recovery could be extended in FY'26? Based on your customer interactions.
Yes. So we do not expect full recovery in H2.
Okay.
We expect probably about 40% maybe around recovery in H2, and the balance will spill over to the next year. See the one another answer to this question. Little more generalized based on the customer interaction is that overall market structure is not significantly changed.
Correct.
It is purely the cautious approach that everybody is taking because of the significant uncertainty, and so nobody is ready to build inventories. Nobody is ready to have significant quantities in the value chain. Many people are looking at kind of back-to-back ordering. Those kind of things are there. So, because as you know, post-COVID, everybody suffered due to very, very heavy or high inventory. So people are, companies are a little bit cautious in terms of piling up inventory. So gradually they are also cautious, and naturally, therefore, the ordering to suppliers like us is also very conservative or very cautious. But structurally, market is not affected in that sense that there is for example, there is some alternative or there is some other product, or the demand for this product is not going to be there. In fact, new application areas are also being developed. So longer term, we see revival. And besides that, we are also, we'll talk about that later on, but some new products we are working on, which is non-polymer, can provide some good growth. All that work is going on.
Correct. So, sir, two questions here in terms of our current discussion. So, one is, let's say the newer products, what we have launched over last 2-3 years, how much they have contributed in FY'24, and is there a possibility that some portion of our revenue degrowth, which has happened in FY'24, plus the recoveries, what we are expecting, like 30-40% in H2, what sort of contribution could further be coming from these newer products so that the impact of this revenue fall could be minimized?
See, the issue is that the question is not about products. For example, we introduce about, I think, 3 or 4 acid chlorides into our portfolio.
Yeah.
And most of them have good potential. But currently, as I mentioned, the conservatism that is apparent or very clear, ordering process is slow, very slow. And so, I just give you an example that we started, I mentioned in my speech that we started supplying some new acid chlorides, not those which we were traditionally supplying to a couple of customers in US.
Yeah.
Same way we started supplying some acid chlorides which we never supplied to Korean market, we have started supplying. And these are all good potentials. When I say good potentials, these are like 1,000, 2,000, 3,000, 4,000 metric ton a year kind of potentials. But it is going to take some time before we really see some major traction out of this. But we have begun, we have started, and that helped us expand our list of customers, list of regions, and build that potential that we can capture in the coming period.
Yeah. So this list of products what you mentioned,
sir, maybe request.
This is just a continuation of my question. I'll join back once this is over. So sir, just to continue with, let's say these 3 to 4 products or 5 products what we have launched, is this a potential to have a turnover of, let's say, 150 to 200 crores over next 2-3 years based on the kind of geography penetration or the customer diversification which we have entered into?
Maybe around 80 to 100 crores, maybe, yes.
Correct. Got it, sir. Thank you so much, sir. I'll join back in the queue and wishing you all the best.
Thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique PMS. Please go ahead.
Yes, hi. Good afternoon, Bimal bhai.
Good afternoon.
Yes. So just in continuation to your last response, this 80-100 crores potential, this would be per molecule that you would be looking at?
No. That would, if per molecule would have been there, then I would be very happy. It's in total, roughly in total. But longer term, maybe this can go to 150, 170, but longer term. Right now, I cannot tell how much time. But what the visibility that we have today is that once this business is pick up, we should be seeing around 80 crore, 100 crore volume.
Correct. And these are, I believe, the acid chlorides which we have launched.
Yeah.
There are also non-acid chlorides which we had.
Just one moment. Sorry, please.
Yes, sir, I believe this is the acid chlorides which we have launched. We were also planning, or we had already launched a few non-acid chlorides also.
Yeah.
You can talk a bit about
non-acid chlorides, about 3 or 4 products are almost kind of on the verge of final validation. Customers are trying to work on the samples that we have supplied. And once testing is done, they are now validating. So validating means they are basically keeping it on the shelf, some part of it, and some part of it they are making their own product, checking their product, and again keeping those products on shelf to see how everything performs. Once that shelf life is over, shelf period is over, then they will go for performance testing for their end product, that how it performs in whatever application they are going to use. And once that performance testing is kind of successful, then we will be able to start commercial supply on a ramp-up, based on a ramp-up plan. So initially very small quantities, and then it will go up and all that. So yes, product development that we have been talking about has been now quite in pipeline, and products are when you said developed, so at our laboratory level, at our kilo lab level, to some extent pilot level, they have been developed.
And the potential here would again be similar, maybe 3-5 years out.
Sorry?
The potential for this non-acid chlorides would be similar, 3-5 years out. This 80, 100, 150, which we intend to do.
Even more. Yes.
Okay. Correct. And then, given the current scenario situation, I mean, we were thinking of putting up a new plant, maybe getting us some long-term contract in place, or maybe for this new product. Obviously, last year was very challenging, and possibly so next year too. So how are we thinking currently in terms of new capacity? And this is in the context that for a greenfield chemical plant, it easily takes 2-3 years to put up. So where are we in that stage? How are we thinking about it?
So basically, see, today when we talk about investment and when we talk about something, setting up something new, we are talking about significant investment. So I mean, as you might be aware, many companies went on aggressively into adding capacities or setting up projects and plants, and then huge struggle they are going through or they have gone through. So we have taken little more prudent approach, and we are just, as I mentioned, some of these 3-4 products may need some additional manufacturing facility, whether it can be an existing facility or it can be a new plant that we are kind of examining. But more importantly, how the customer is coming forward in terms of the demand visibility, and once this validation is done, or during that period, that would actually define how we are going to, move further on this. So we are looking at options where we can do something. We look at some small facility and take over, or we can do some arrangement which we already have, like job work and all that, or we can look at also greenfield facility. But as of now, immediately speaking, greenfield may be not very, very high on our consideration. It is under consideration, but not very high on our consideration. Probably a facility which has some possibility to just modify and then start production. Those kind of options we are looking at. So with little limited or lower investment, we can take less risk. We will take less risk, and then we can still capture whatever opportunities that we have. And once, like you mentioned about long-term contracts, so typically we are always in dialogue with various customers for long-term contracts also. Some of the customers, some big companies are still in favor of long-term contracts, but a big number of customers, as I mentioned, are playing very, very conservative across chemical industry, not only Transpek's customers, but across chemical industry. And nobody is very keen. I mean, there are few exceptions, but generally nobody is very keen to enter into something which will commit themselves for a very long time. They are just waiting and watching to see how this uncertain situation unfolds. But we are in dialogue with a couple of customers for some sort of contract like that. But of course, don't expect that is going to be the same level or same type of contract that we have seen earlier. But at least it will provide a stable and consistent business of whatever size that would be available.
Right, fair enough. And sir, given the total capacity we have in place, given the current pricing, our peak revenue from the current capacity we can do would be about 800 crores?
More than that, about close to about 900.
Sure. Thank you and all the best.
Of course, will depend on price, but about 900.
Correct. No, thank you and all the best, sir, and I hope we continue this call. Thank you.
Yes, thank you.
Thank you. The next question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. And, my question is, sir, on the new product development and,
Sorry, Mr. Gupta. before you go ahead with the question, may we request that you use your handset for optimum audio quality, please? Thank you.
Yeah, I am on handset only. Is it better now?
Yes, sir, it's better now. Please go ahead.
Sure. So, sir, my question is more on the product development and new product introduction over the past few years that we have seen. FY18 we were around 350-360 crore kind of revenue. And then we got the long-term contract with our customer, and our revenue scaled up to 600 crore. But post that, we did face challenges because of COVID and all. But in FY22 and FY24, our top line has been around 600 crores. And FY23, we did see a growth, but that was primarily driven by prices of raw materials spiking up, leading to increase in our products. So sir, in terms of new product introduction over the past 4-5 years, except for the long-term contract that we have, how has been the new product performance in terms of our revenue contribution? Let's say the products. How many products did we develop over the past 3-4 years, and how has been their contribution to the revenue?
Okay. Just to correct one thing, that the 600 to 800 crore jump in FY22 and all, it was not driven only by raw material price. There was also significant quantity jump, especially as we discussed earlier with another shareholder, that especially of the polymer business, the volume coming from the polymer business. So that is one.
Okay.
Now, last 3-4 years, we have introduced about 5 or 6 acid chlorides. And if we talk about FY24, for example,
yes,
then we did business of some of these new products. And that's why you are seeing about 600 plus crore volume. Otherwise, it would have been somewhere in the range of 570 or 575 or so. So there has been contribution of about 25-30 crores coming from some of these new products. But the products are introduced in a gradual manner. So over 3-4 years, say for example, one product was introduced this year only, one product was introduced, or maybe 2 products were introduced last year. And some of these products, as I mentioned, are undergoing validation at this point in time. I have explained also in past, in my earlier calls, that the process of commercialization sometimes takes 2.5 to 3 years. Because most of our products go in very critical application. For example, making a medicine, pharmaceutical. So they never take chance with that. Or this polymer, the polymer that is made from the product that we supply, these are mission critical applications like defense and like firefighting and aircraft manufacturing and high-end vehicle manufacturing, those kind of things. So validation is a very, very long process, and overall, I can say today that we have now come to a stage where we have many products. As I mentioned in the earlier, in response to earlier question, we have many products which are at the last, stages of either approval or validation. So in next 2 years, what I feel is that what we believe is that you will see many products getting commercialized, and then gradual pickup of volumes.
Okay. So the 70 crore of revenue contribution from this new molecules you are expecting in FY25 itself?
H2 and coming, annually you can consider from next year, but H2 will see some of the revenue from that.
Okay. And sir, when the polymer business stabilizes, our base revenue should go back to, let's say, at least 700-750 crore, or
close to about 800.
800 crore.
Yes.
Okay. And sir, one thing on the capex, or that you told that you are not too keen on doing greenfield capex. So, given the regulatory challenges that we have at our existing Ekalbara site, does it mean that our major expansion or major growth will come from, job work to our to our group companies, or, let's say if you have to drive our revenues from, let's say 800 crore revenue from when our existing business bounces back, plus 80 to 150 crore kind of revenue from our new products over the next 2-3 years. So let's say if you have to go beyond 900,000 crore of revenue, we'll have to do more job work. Will that be the major growth, major source of capacity enhancement, or we are very keen on looking at, buying an existing facility also?
See, the job work capacities are largely in similar products, not in some of the new products that we are looking at, which are not acid chloride. So whatever job work capacity is within the associate companies is also in acid chlorides. So naturally, when we are talking about products which are non-acid chlorides, we will have to look outside. There is no question on that. Now, looking outside, as I mentioned, would mean two things. One is that are we able to find a job worker outside with this kind of capabilities and this kind of permissions? That is one. And or alternatively, are we able to look at a small facility, existing facility, which we can take over? So all these considerations are being, all these are being considered, and as I mentioned, that based on how customers come up with their plan in terms of ramp up and all that, we will make decision, accordingly. For example, if customer says that, okay, 4 or 5 customers says that, look, our ramp up plan is going to be very, very slow, then we may not immediately invest into anything. We will just look for a job work facility, non-associate job work facility.
Okay.
And if customer says, no, my ramp up plan is quick, then naturally we will have to look for something where we are committed properly.
Okay. And then one last question on, products and the development. Apart from this new products that we are planning to launch, which we are expecting to scale up in second half of FY'25 and, FY'26, how many products are under development, and what are our plans of launching new products for, let's say, medium term over the next 2 to 3 years?
So product pipeline is quite big. Again, as I have explained in past, that we continue to look at new products, new opportunities in 2 ways. One is that we do our own market research, and based on that we look at potential products, and second, customers interaction. So most of the times our customers are giving us multiple products that can you look at these products and can you tell us? So many times we have to say no because they may not be within our strategic intent or within our capabilities. But pipeline is quite robust. The R&D team, the new business development team, new product development team is typically very, very busy. Basically that's not an issue. And some of the products that we are looking at can be also a very, very large volume potential. But right now, of course, it is more at understanding stage.
Okay. Thank you, Mr.
Thank you.
And sir, one more request is for, our stock has been under this range for some time now, and given hopefully the business will bounce back over the next 1 to 2 years. One request was on buyback if it's possible. Given our very good balance sheet now.
Sure. Now see that this is a good point, and we will definitely put it to the board. But on one hand, you are asking me about when you are going to invest in new facilities. And on the other hand, you are telling me to do buyback. So we'll have to see what is right for business, right? So we'll take the decision accordingly.
So thank you, sir. Thank you, Mr.
Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good evening, sir, and thank you for the opportunity.
Good evening.
I have a couple of questions. Good evening. So I have a couple of questions. First, with respect to volume degrowth in FY'24, So you said our volume declined close to 25% in FY'24. So would it be safe to assume that the overall demand fell by 25% or we lost market share or wallet share with our customer?
No, see, there has been loss of market share, but it is to some extent, very small extent in domestic market. So far as, and as you know, our domestic market is quite small compared to export. Export market, there is no market share loss in that sense. Overall requirement from the customers reduced because of their end product demand being subdued, of course, on a temporary basis. As I mentioned, structure of the business has not changed. The customers are also expecting revival of their demand gradually as, either people learn to live with this uncertain situation, which, props up and gives surprises time and again, or some of these uncertainties go away. So they are very clear, the customers are very clear that demand will gradually go back to the original level. That is the easy part. The hard part is that they are not able to, or nobody is able to very confidently say how much time it will take. So there are discussions, there is indication that maybe in another 12 months' time, everything should reach to the earlier levels and all that. So based on that, whatever intention we are doing, that H2 and next year, we'll see some gradual increase or gradual growth or reversal of degrowth that we have seen.
Yeah. And my second question is regarding our investment in Silox India Private Limited. So I just wanted to know what is the purpose of this investment, and are we looking to disinvest this investment, or is it something like useful to our business?
No, see, the point is that Transpek sold its sulfoxynation business way back in 2000 to an European group called Preon Group, and Silox is their organizational name. At that time, when we sold off that division, we maintained a small percentage of shareholding as part of the transfer agreement. So that shareholding has grown over so many years to a certain value. Now, when I say value, this is not market value because this is illiquid stock. This is not listed, and this is privately, in that sense, privately held company. So it is not easy to encash because even if we want to encash whatever value that we can fetch, the Silox or the company or the promoters of Silox or the board of Silox may not agree to part ways with such a large amount of cash. So this is kind of illiquid investment at this point in time. If you ask me, I would also like to encash this investment, but it's not that simple or it's not that easy. On the other hand, we generally get good dividends. Over so many years, we have been getting very, very good dividends coming out of this investment.
Yeah, that's good to hear. And my last question is regarding our, you said our high margin products are 36% of the total revenue, right?
Would be. Once we add some of these high value or high price and high margin products, once we start adding that is the target that we have. About 30-35% of the volume would be coming from those products.
Okay, so what is the current ratio of total revenue for these products?
Almost none, because these are all non-acid chloride products. So as I mentioned, they are under validation with customers.
And what is the margin profile of these products as compared to our current product?
This can be almost, you can say 15 to 20% higher than what we are earning today. In terms of the EBITDA margin, you can say. for these products, basically about whatever revenue that we talk about, 30%, 35% revenue that we may fetch, that would give much higher EBITDA than what we are. Our EBITDA, as you know, generally is between 16 to 20%. This time I think it's about 17.8% for the entire, the whole business. Once we are able to commercialize these products, 30-35% of our volume should be probably EBITDA of 18 into 20, so about 22-23% EBITDA should be there from this product.
And my last question is regarding the die market. So can you give a comment on how the die market is performing? How is the customer engagement with die players?
Actually, we have very small exposure now in dyes and pigments market, because our main product that we used to sell was thionyl chloride, and now we are not selling it. We are consuming entire thionyl chloride production captively. But whatever my understanding is about dye market is that it's still not recovering. I mean, it's still in trouble.
Okay, fair enough. Thank you for answering all the questions. Thank you.
Thank you. The next question is from the line of Nitin Dharmawat from Aurum Capital. Please go ahead.
Yeah, thank you for the opportunity, and thank you for organizing this call also. I just wanted to understand what is the capacity utilization for the current year, that is financial year 24, and what is the capacity utilization we are expecting for financial year 25?
68% has been 24, and about 78-79% we are expecting for 25.
Okay. And what is the peak revenue at current prices we can expect, and peak revenue at median prices?
Median prices are difficult to say, but if we are able to utilize everything well and at whatever is the normal price that we can fetch, we can reach around 920 crores.
With 78-79% utilization.
No. As I said, if we are able to utilize everything fully.
Okay, full utilization. Okay.
Yeah.
And do you see any revival in end user industries where our products are getting consumed?
Yeah, so see, there are three major segments that we need to look at when we talk about this. One is polymers, which is, of course, polymers are in two forms. One is in textile and clothing form, or second is in formed, so kind of molded form and all that. And third is, of course, thread and everything. But all these polymers, the supply that we do is going to very high-end polymers. They are called aramid fibers. And the market for that, or the demand for that, is right now a little bit subdued, but it is going to be consistently growing. For example, as we speak, some of the companies in Eastern market, Far East market, like Korea and Japan, they are expanding their capacity for aramid fibers. Some are, in fact, almost doubling their capacity.
Okay.
So aramid business is going to gradually consist, as we understand today. So far they have not been, nobody has been able to really find a significantly competitive material. And aramid business is also restricted within a few companies globally. When I say aramid, high-end aramid, there are also some low-end aramid products where some Chinese companies are active, but most of our products go into high-end market. So growth is there. Growth is not going to be kind of exponential or very fast, but potential is there. The growth is going to constantly happen.
Okay. And I see that our fixed assets increased by almost 25% in the last 2 years. So what is it for? Can you provide some details over there?
Yes. See, basically, one of the major thing that you are seeing in assets is right of use assets. So, because of the accounting requirements, in AS requirements, whatever assets that we have on lease also need to be put inside the gross block or whatever the asset block as right of use assets. So right of use assets, for example, has grown almost by how many crores? 70 crores, right? 70 crores. Now, when I say 70 crores, it is not actually the asset increase. It is purely the way accounting is done. So what they do is that they take 5 years of the leased assets. We have, as you might be knowing, we have many ISO tanks which are on lease. So that lease asset, they do the 5-year calculation of the lease rent, and then they do some calculation. I mean, apply some formulas, and then they come to a number which is basically considered as value of the asset, and that is put in that. Secondly, there is also a small increase. There is also another increase in property, plant and equipment, which is about 32 crores, which is largely due to thionyl chloride. We had built one additional stream. Then capacity modification, enhancement. There is good amount of expenditure on energy conservation. As I mentioned, we just replaced one plant, so some part of that is accounted in that. There has been some of the expenditure on new boiler, for example, like that.
I got it. My two more questions. So one is, you already answered that partially we have investments of around 300 crores. I wanted to know about the buyback plan. So you mentioned something about that. I also wanted to know where this fund is currently parked, where it is invested. So if you can throw some light on that.
No, there is no parking of fund in that sense. See, when we invested, when I say invested, we just held some shares in that company, Silox, and the value of our face value of our investment is very, very small. It is just about 3 crore.
Mm-hmm.
Okay, and valuation as per the balance sheet of that company is 309 crores. Now, as I mentioned, that is just valuation. This is not money that we have invested. What we had invested was only 3 crores. And the valuation is done based on Ind AS requirement. So it's kind of notional value.
Mm-hmm.
As I mentioned earlier, also I would love if I am able to encash that investment.
Oh, that looks slightly challenging task.
Yes.
Okay. So my final request, rather, is since we have only this opportunity to talk to you, we would like to visit the plant because it will give us great opportunity to learn. And we have suggested this to IR also. So if you can help us doing that, it will certainly be of help. We'll travel from our city because we will be coming from Pune and we are ready to do that. So if you can plan something on that line, it will help all of us.
Yeah. So as at Transpek, we have always encouraged and invited shareholders to visit us. In past, I think about 2-3 groups of shareholders in batches of about 10-12 they had visited. We would be happy to welcome you or anybody on the call, based on a proper schedule and proper arrangement in consultation with our investor relations advisors. Please connect with them and we will organize. No problem.
Wonderful. I'll do that. I'll connect with you. Thank you.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello. Thank you so much for taking my question. Hope I'm audible.
Yes.
Yeah. Hi, sir. So, sir, my first question I really wanted to know, sir, Q3 and Q4 revenues are very similar, but our margins are very different. So what was the major driving factor for that, sir? And would we see, so in FY'25, will the margins be a bit subdued? So how would it be, sir?
So basically, as I mentioned in the beginning of my speech, that when you look at Transpek's financial performance, you must or you should look at annual performance, because quarter to quarter there can be variations. Now, why does this variation? So I'll just explain that. We have diverse range of products. So we have products which are, as I mentioned, going into polymers, going into pharmaceuticals, and then there are different customers, different regions. So just to give you an example, that region A, same product going to region A and same product going to region B, there can be price difference, there can be margin difference based on that price. Secondly, in some cases, we may have consistent margin because of some agreements or some long-term purchase order that we may have from the customer. Now, in a particular quarter where you see our margins to be higher, we may have demand or we may have orders for those products where the margins are higher or margins are consistent. In the next quarter, you may see lower margin because the product or the demand that we have or the supplies that we make may not be as good margins as we had made in the earlier quarter. So on an average, if you look at last 4 or 5 years annual numbers, you will always find that we have remained around 17, 18, 19, 20% EBITDA. So that way margins are quite consistent. Quarter to quarter, you will definitely see variation.
Oh, okay. Fair enough, sir. That helps me a lot, sir. And sir, just like from what we had, replied to the earlier participant, we see some kind of demand betterment from H2. So is it fair to assume that H1 would be similar to H1 FY'24? And like, if you could just give some small guidance in terms of our revenue and EBITDA in terms of FY'25.
I can say that it would be little better than H1. Last year.
Okay. And so, sir, on overall, can we do a double-digit growth in this year, sir?
Just one moment.
Yeah.
Just one moment. Maybe very close to double digit.
Oh, okay. Fair enough, sir. And so just last question, sir. So what, as analysts, we would not be understanding the industry very well, but what could you say as would be a turning point that, okay, growth has started coming in, orders have started coming in, what could, how would you be able to define that for our industry, our company, so that, okay, now things look like what they were looking in FY'23.
In terms of overall chemical industry we are talking about?
Yeah, so our overall chemical industry, if we speaking about destocking and maybe a bit about our company also, something that, you think is a tipping point for.
It's very interesting. I mean, I'm sure you might be invested in other chemical companies also, and you might be hearing the same thing from there. It's like, we get a sense that, okay, things are going to improve now and destocking has happened and this and that. And then still some challenges keep on coming. But what I feel is that maybe in another 1.5 years time, we should be seeing, kind of back to glory days in chemical industry. This is my feeling. Now, it will also depend on how government policies and everything else is also there. How because in my view, we have not been able to capture China plus one opportunities as much as we should have captured.
Oh, okay. Fair enough, sir. That's it from my side, sir. All the best, sir.
Thank you.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Hello. Am I audible?
Yes, sir. Please go ahead.
Thank you. Thanks for the opportunity. Good evening, Bimal bhai.
Good evening. Good evening.
Bimal bhai, couple of questions. First, you mentioned one clarification. You mentioned that 30-35% of the revenue coming from these new products, which are high margin products. You mentioned the margins will be 22%. So you are talking about margins for the overall company to go from 16-20 to 20-22 range, or 22% is the margin for that 35% product basket?
So this 30-35% can give 22-23% EBITDA.
Okay, fair enough. And sir, this 30-35% high value products which you are talking about, so does it include this new acid chloride which we are starting this year or have started say in last 6-8 months, where you mentioned that...
No. These are non-acid chloride products.
So you are talking about non-acid chloride. Let's assume that you mentioned that our polymer business can be around 800 to 900 crores and another 100 crores from this new acid chloride.
No. Just one moment. Not polymer business. Our total business can be about 800 to 900 crores, which includes pharma, polymer, everything. Not just polymer.
Okay, got it. So that means, including this new acid chloride products, you're talking about 800 to 900.
Yes.
But then this doesn't include this non-acid high margin products, right?
Yes.
So when you say 30-35% contribution can be from there, even if I take say 900 as the existing company turnover, so are we talking about somewhere 300 crores of revenues from these new products?
If you take 900 as the base, yes. But if you take current base of about 600-700 crores, then it's about 200 crores.
I mean, what time frame can we do this 200 crores?
We basically need to understand the overall demand visibility, but potential of this products is quite good. It can go to 200 crores, it can go to 250 crores when you put all these products together.
Sure. And I believe these are the new products where Mr. Singh has been working on these products. Probably it includes one of the pharma product also.
There are products for pharma, there are products for, again for polymers, there are products for some other applications also.
Including the combination chemistry?
Yes. Mr. Singh is very actively working on some of these products, yes.
Yeah, I know we have met during the AGM, right. So he seems to be quite upbeat on the products. But also we were waiting for some regulatory approvals for these products. So you mentioned somewhere in one of the participant replies that the validation batches are being done.
Yes.
So typically when do we expect to launch these products?
Very difficult to say, maybe 3 months, 6 months, 8 months. It's very difficult to say like that because as I mentioned earlier, customer will do not only validation, customer will also do performance trial. Then first performance trial, then second performance trial, then commercial performance trial. So it's a process and sometimes these products are priority at customers and sometimes they are not. It may be very big priority for us, but it may not be as big priority for customers. So this is little tricky to forecast. But as I mentioned, over next 2.5 years, we should be able to commercialize most of these products.
Sir, are we waiting for customer approvals or also we are waiting for regulatory approvals as far as these products are concerned?
Both.
And sir, assuming कि suppose the customer approvals come in say next 8 to 12 months, say 12 months. So then, do you feel somewhere, is it possible that the customer approvals come, but somewhere we lack the capacities to produce these products? Maybe because the regular approval is not coming in, you're not getting that company which you would like to ideally buy and, probably produce those products at some job working company or a new company to be acquired?
Largely, that possibility is very, very remote because we already have gathered some understanding and information on what needs to be done. So we are working on some of those possibilities. So that possibility is very remote, that we may have product which we may not have permission. Or we may not have place to manufacture. At the back of your mind, there is some preparation done in case the approval comes sooner. Yes. As I mentioned, for example, we can do job work somewhere like that. So there are options that we have considered, and we are working on some of those options. But we will actually commit to some of these things once we have some clarity on the approval process. Customer approval process.
The product approval, not the facility approval.
No, product approval.
Sure. So one last question, and I know we have been talking about this for a long time. Sir, we had planned a 120 crores capex in Vizag somewhere before COVID, 6 months prior to COVID. And we were putting up a new plant, a new premise we had thought about. In fact, when we used to meet you during 2017, 18, 19 AGMs, that time we had mentioned that it is really difficult to get approvals in Gujarat, so we will choose some other state. And then you went ahead and took up this land in Vizag. And then, of course, COVID struck, and our polymer business had a recent downfall. So I do understand, say, for 2 years post-COVID, when COVID started and for 2-3 years, we thought, let's put this behind or let's put it at the back burner. But is there some structural change in the business because of which now you're not ready to commit a large capex, which is just about 120 crores or maybe 200 crores, and our balance sheet is quite strong enough to handle that kind of capex? So there is some kind of structural change, maybe from product side or from customer side. I'm just trying to understand what has changed from after you bought that land of 120 crores. You were doing a capex of 120 crores in Vizag and then you cancelled it. Until today, we are not trying to commit any greenfield capex.
So basically, that was not even 120 crores, it was little more. But that was on the back of interactions with certain customers who were keen to work with us in some of the products that they were manufacturing, and they wanted us to manufacture. Now, because of the COVID situation, their plans overall, this was also based on their growth plans. So their growth plans have also kind of halted. And whatever business we had at that time or whatever business we have at this point in time, as I mentioned, there is no structural change. What has changed is that whatever their ideas or ambitions or their forecast or their growth propositions that were there, those could not continue due to this COVID and then this war and other situations. And therefore, naturally, we aligned with our customers the propositions that, okay, let us wait until the same similar situation arises. And at that time, we will commit ourselves. And if you really look at the post that decision, which is to withdraw from that investment, whatever has happened, and you are seeing many chemical companies have gotten into significant trouble because of large investment and idle capacities. I think it was a very prudent decision to not to commit to that. As you rightly mentioned, balance sheet is very strong, and we hope we may have similar opportunities coming from customers soon. Then we will definitely go for this kind of investments again.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you everyone for joining us today on this earnings call. We appreciate your interest and time in the company. If you have any further queries, please contact SGA, our investor relations advisors. Thank you.
Thank you. Thank you. On behalf of Transpek Industry Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.